What is up, everybody? Tuesday, September 24th. We had a great day in the market. I mean, very clean price action overall. As you can see, I took two trades here. It's pretty messy because I try to keep as much on my chart for these trade reviews. So I took two trades. Obviously, the first one was a loss, and the second one made back that loss plus some, as you can tell. The first one I lost 1R. Here I made 2.59R, so I was up 1.59 on the day. Pretty much, it came out to pretty much 1R on this account for Top Step. And I also took another trade right here on my Apex accounts to bring those back, because I took this trade and then I took that trade on an Apex account. And then on another account, I just took only this trade too. So overall, a great day. I'm green on every single account, thank God. So starting out on the 4-hour time frame, let's take a look at what we had here. Just like yesterday, we came in with a bullish bias. Same reasoning. Price tapping into this area of discount. I wanted to come to this external range liquidity. It looked like today it wanted internal first before going to the external range liquidity. And so I was bullish biased that in the morning. I was looking for a reason to go long. I was keeping an eye on this 1 hour fair value gap, but mainly this one right here. Okay, this was the key indicator of whether we were going to end up being bullish or not. I had also marked out this 15-minute fair value gap right there. So looking at areas of confluence of where we could potentially become bullish and where we could become bearish. So here, I wanted a 15-minute close above to be able to target this drawn liquidity up here, which was a previous high. This was the external range liquidity level right there at 203.75. So we obviously did not get that close above. I tried to long it and I lost. I looked for an entry for a short here. I actually got stopped out on that too, but it did end up hitting. I just got a little bent out of shape because of it. Obviously not good, but I'll review that one too. So overall, right, we had this 15-minute fair value gap that was holding us. The minute that this got invalidated, I could have looked for shorts, which I did. I saw a short setup here targeting the low that was right there, which was part of the internal range liquidity, which was the London low from Monday morning. And so that was a good place to take profit when also looking for a reversal from that point. And the reason why I would have gone short on that would have been the fact that this big candle right here closed below this 15-minute fair value gap, also displacing below this low right there. So it would have been good for an entry. So that would have been at 10:15 is when we would have looked for a short entry targeting this low right there. Once we've got that confirmation, and really all you need is this. You only need that, okay? You don't need to be trading the whole thing. Yes, sometimes you can catch it like I did here. I caught all this right here. But sometimes all you need is this, okay? Contract size, it's all relative. What matters is the risk to reward on these trades. So with that, right, we wanted a 15-minute close above to go long, and these were the invalidation points to go short. Overall, in the higher time frame, I wanted to see if they were going to end up sticking. So coming into the market, let's review that first trade that we took. All right, turn on the quarterly cycles indicator like we usually do. So here we had accumulation. Now the thing that I noted was the fact that this wick right there took us above that high and it started to drop down. Now that was the only thing that kind of had me thinking otherwise of going long, but I wanted to stick to my plan. And I should have waited for some kind of close above this level right here that I had marked out, right? 15-minute close above for bullishness. But I didn't do that. I preemptively got in because I wanted to get in on something since I thought that the draw was so close. I got a little worked up thinking about yesterday's trading session, but obviously that's not right. We can't be doing that. So the trade that I took was this 1 minute bearish fair value gap. I wanted to see that get invalidated. I entered in there, put a stop below this low right here. As you can see, boom, stopped me out really quick. Of course, this one also got invalidated, but I know already from my past mistakes, if I miss out on a trade here, I wait for the next quarter. Okay, if I lose on a trade here, sorry. If I lose, I'm not taking a second trade within it. I'm going to let the quarter play out so I can get more information so I can make a more informed decision on what I need to do. So that short trade that I was talking about, 10.15, right? This candle right here was the one that confirmed the close below that 15-minute fair value gap, or sorry, this 15-minute fair value gap right there. Here, what could we have looked for? We see an inversion fair value gap get formed. That was actually the trade that I took. Let's mark that out. On another account, I believe I entered here, and we had my stop above this high. Target that low. That's a 1 to 3 risk to reward. Really solid trade. Now, what did I end up doing? When price was just consolidating in this area, I was getting super emotional about it. I was getting fed up with the fact that price was taking so long. It was already 10.18, and I was really nervous that it was not going to hit that. So when I saw this displacement candle down, I actually put my stop at break even right here. And as you can see, price came back up, tapped me. If I had done what I originally intended, which was to make it break even once we pass through this level right there, once it hit that candle, put it break even, I would have ended up making a nice risk to reward there, and then waited for the next trade, which would have been the one right after it. So I did take this trade. I closed it very preemptively, allowing myself to play into my emotions, which was not good. But regardless, this was also a good trade, right? Like I always say, there's always a second entry. Maybe you missed this one. Maybe you took this long. Look for an area of confluence. Okay, we had that 15-minute candle close right there, 10.16. You market order in, put a stop above this high. Boom. Because we saw that inversion fair value up on the lower time frame. Now, here was the trade that made it back. You see that I marked out this 1 minute fair value gap right there. We rejected off of that, hit this area of confluence here, this low, the Monday London low. That was an area of liquidity. Price moved on up, created a market structure shift as well. Let me delete this so it stops popping up. Created a market structure shift right here. And also that inversion fair value gap came into play. As soon as that candle closed, as you can see, I market ordered in on the next one. We tapped into that inversion and started to take off very easily. Now, when price moved to this high right there, I actually moved my stop to break even. I played it very aggressive only because I did not want to give back any more than I already did, since I already had a losing trade here. Put my stop above to break even, and then as price continued to move on up, I took some partials here at this the opening high. As you can see, I think I took everything off there. And the last one I would have taken it up here, which wasn't that much of a difference, but regardless, here I got a 1-to-1, I believe. Yeah, pretty much a 1-to-1. I risked 250 on this account, and then this trade, and I also risked 250 on here, and overall it gave me a very nice risk to reward. Almost a 1-to-2, I believe, because I got in somewhere around there. But anyway, I ended up the day 1R, so that was good. And then here was the original trade idea to make it break even once price moved above that swing high. So 2 great trades, right? You missed that one. And sorry, there was one other one that I did not mention before. Here, this was another trade that I took. So as you can see, price is aggressively moving on up, not creating any kind of bearish imbalances. Now, if we know that their draw on liquidity is up there at that high, right? What do we end up thinking that's going to happen to a bearish fair value gap? It's going to end up getting invalidated. Very obviously going to get invalidated. We're already within premium and we're not getting any kind of bearish movement. Here is bearish momentum. If this truly wanted to continue moving down, I would have expected this to be respected and then continue moving. But because we invalidated, I market ordered in as soon as that happened right there, put my stop below that low, targeted that draw on liquidity, which was the external range liquidity right there. It was a nice 1 to 4.83. This trade was a 2.6. This trade was a 4.83. What seems to be a little better here? taking the second entry, the re-entry, okay? Because this gives you way more confidence in the trade, because you already know we rejected off of an area of liquidity. Everything that is bearish is being disrespected. We're moving on up. What is the obvious draw? The external range liquidity. So you could even trade like that, those kinds of models, those internal range models too. So overall, that was good. Another thing that you could have noted that would have kept you super bullish was the fact that we had this 1 hour fair value gap right there. And what do I always say? Look at the bodies of the candles. What do they tell you? They tell you the story of what's going on. If the bodies are respecting a fair value gap, I still consider it to be valid. It was a nasty wick down, moved back on up, closed within that, or actually right above that. And then the next candle, boom, was a big push on up. So that was just crazy. This move on up here was beautiful. It was a very obvious move that we were going to end up moving on up. You could have looked for a re-entry of some sort within this candle right here, which is what I did. I took from here to pretty much the high of that candle. So being patient and letting the market show you what you need to do. There was an entry here for a short from here to here, and then long from here to here. Both very good risk to rewards. Actually better than if I had taken a short from here all the way down here and from the long from here all the way up here. So sometimes those smaller moves pay a little more. But regardless, we take the setup whenever we see it. I hope you guys ended up green today, and I will catch you all tomorrow. Peace.